So, Apple. I mean, what is there to say? It's one of the most valuable companies in the world, worth almost $4 trillion. But, and this is a big but, it's also a company that has some of the smartest investors on the planet totally at odds with each other. And today, we're going to try and figure out why. We're going to deconstruct that very dilemma. And you can't really get a better seal of approval than this, right? This is Warren Buffett talking about Apple CEO Tim Cook. I mean, Buffett's bet on Apple, which he started way back in 2016, is literally one of the greatest investments of all time. He turned $30 billion into more than $174 billion. So yeah, this quote, it's pretty much the bull case in a nutshell. Okay, but here's the twist. This is where the whole story gets, well, complicated. Despite all that incredible success, Buffett has actually been selling off his Apple shares. In fact, he's trimmed his stake in 6 of the last 8 quarters. So the huge question is, what does he see that maybe others don't? And that's exactly what we're going to dig into today. All right, so to really get to the bottom of this, here's how we're going to break it down. First, we'll look at the Q1 supercycle, then the long-term ecosystem. After that, we'll see what the big money is doing in this battle of the titans. Then we'll flip to the other side, valuation versus growth. And finally, we'll cover the headwinds that could be ahead. Okay, so let's jump right in with the short-term bull case. Really, the biggest reason for all the optimism right now is Apple's next big earnings report, the one that covers the all-important holiday season. So Wall Street is expecting an absolute monster of a quarter. Just look at these numbers. The consensus is for revenue to jump over 11%, hitting more than $138 billion. And a lot of this is being driven by what analysts are calling the iPhone 17 supercycle, basically a huge wave of people upgrading to the new model. And you can see it right there. Both iPhone sales and that super profitable services division are expected to grow by double digits. That's huge. And you know what? The consensus might even be a little too low. Some analysts are predicting revenue could get close to $140 billion. Even Tim Cook himself has said he expects it to be the best quarter ever. Why? Well, he said the reception for the new iPhones has been off the charts, and they're seeing a big rebound in China, which is a massive market for them. So yeah, that's a pretty powerful short-term story. Okay, so that's the short-term picture. Now let's zoom out a bit and look at the long-term investment case. Because really, beyond any single quarter, the real true strength of Apple is its ecosystem. And right at the heart of that ecosystem is this just staggering number. Over 1 billion paying subscribers. Think about that for a second. This is why Apple isn't just about selling iPhones anymore. It's about this huge, super loyal customer base that's basically locked into Apple's world, paying them for services month in and month out. And what you're seeing here is the power of that services flywheel. I mean, every single one of these segments had a record-breaking year. Apple TV viewership just soared. Apple Music hit all-time highs. The App Store alone had over 850 million people using it every week. What this does is create this incredible stream of really high-margin, predictable revenue. It means the company is so much more stable and isn't just relying on the ups and downs of selling phones. So, you've got this strong short-term case. You've got this amazing long-term story. You'd think all the biggest investors in the world would be just piling in, right? Well, this is where the story takes a really dramatic turn. And this right here just perfectly captures that conflict. On one side, you've got Warren Buffett, maybe the most famous investor alive, and he's been selling shares pretty consistently. But on the other side, you have these institutional giants making absolutely colossal buys. I mean, Norges Bank, that's Norway's giant sovereign wealth fund, started a brand new position worth almost 39 times billion dollars. And then you have Kingston Capital, which boosted its holdings by, get this, over 573,000%. That's just wild. Now, what's really interesting is that it's not just the big institutions. Even as Buffett has been selling, the number of hedge funds holding Apple stock actually went up in the last quarter. It climbed from 156 to 166. So what does this tell you? It tells you that the so-called smart money is completely divided on this. All right, so why? Why would an investor like Warren Buffett be selling? Well, the answer really boils down to one word: valuation. And this quote right here, it just nails the core of the bear argument. Look, nobody's saying Apple's a bad company. That's not the issue. The concern is that the stock price has just gone up so much, so quickly, that it might have gotten way out ahead of its actual future growth. And this chart really shows you exactly what they mean. See, back in 2016, when Buffett started buying, Apple was trading at a price-to-earnings ratio of around 12. He was getting a phenomenal business at a really great price. But today, that same ratio has almost tripled. It's sitting at 33. So now investors are paying a serious premium for the same company. And here's the kicker. You're paying that much, much higher price for a company whose growth is actually expected to slow down. After an amazing 23% growth in earnings last year, the forecast is for that to basically get cut in half, down to around 11% a year. And, paying more money for less growth, that is a classic textbook investment risk. But look, it's not just about the valuation.
there are some other pretty significant challenges facing Apple that investors are definitely keeping a close eye on.
Yeah, this is not exactly a clear runway for them. First, you've got this memory storm brewing, which means the cost of components is going up, and that could squeeze their profits. Then there's all this regulatory heat, especially in Europe and India, which could threaten their services business. Over in China, competition from local brands like Huawei is getting really intense. And on top of all that, there's this huge pressure on Apple to show they can actually compete in the AI arms race. A lot is riding on that.
Okay, let's bring this all together. What we're really looking at here is a company that's at a major turning point. On the one hand, you have this incredibly powerful short-term story, right? This iPhone supercycle. But on the other, it's facing some very real, very legitimate long-term questions about its growth, its valuation, and the competition it's up against.
And all of that leaves us with one final and I think really provocative question. See, Apple's valuation today is built on its absolute dominance in hardware, the iPhone. But its growth in the future is supposed to come from services and AI. So the multi-trillion-dollar question is this: can that future growth from AI and services really justify the premium, hardware-driven price tag that the market has already slapped on it? And honestly, that's the dilemma that every single person thinking about investing in Apple has to solve for themselves.